Alright everyone, welcome back to the channel. Today we're doing something incredibly special, a deep dive intraday forecast for the Bank Nifty Index for Wednesday, November 12th, 2025. This analysis is for expert-level interpretation and purely for educational purposes. We're going to break down the day minute by minute based on a unique methodology so you can see how these powerful forces might play out in the market. First, let's set the stage. The overall intraday trend for Bank Nifty on this day is forecast to be highly volatile, but with a dominant bearish bias. Think of it as a clash of titans. We have immensely powerful positive and negative forces going head to head. This isn't going to be a simple, straight line down. Instead, we expect extreme swings, sharp, violent whipsaw movements, and a massive battle at key support levels. The astrological charts suggest that while the bulls will put up a tremendous defense, that defense will ultimately be breached, leading to a bearish close for the day. So, how does this all unfold? The timing is everything, and it's all dictated by the Moon S-transit through a very volatile lunar mansion known as a Shet. Think of the moon as the timer that triggers all the key events we're about to discuss, and the central catalyst, the spark that lights the fuse, is the CPI data scheduled for 10:30 a.m. Let's begin with the market open. From 9:15 a.m. to 10:15 a.m., we're in a period I call the anxious coil. The market opens under a complex set of influences, but the key thing to know is that everyone is holding their breath, waiting for that 10:30 a.m. data release. With both Mercury and Saturn in retrograde, the price action will feel sticky, heavy, and very deceptive. We'll likely see a tight, nervous trading range with a slight downward drift. The underlying bank stocks won't be providing any confidence. This is a zone of high premium decay for options traders and a very poor time to initiate new positions. The market is just coiling up like a spring, building tension. Now, brace yourselves for the next phase. The 30-minute window from 10:15 a.m. to 10:45 a.m. is the sudden volatility and maximum whipsaw zone, centered right on that 10:30 a.m. CPI data release. This is forecast to be the most dangerous and untradeable period of the day. The release of the data is not just a news event. It's a detonation. It's expected to activate an explosive planetary conjunction, with Mercury being retrograde. We're anticipating an immediate, violent spike in both directions, potentially hundreds of points. This will be a classic false move designed to trap both bulls and bears. Algorithmic trading will be at its peak, hunting for stop losses. This zone is a trap and should be avoided by all but the most sophisticated machine traders. Okay, so what happens after the chaos? From 10:45 a.m. to 12:15 p.m., we see the downward reversal and breakdown moment. Once the dust settles from the data release, the true underlying trend is expected to assert itself. That false move, which will likely be a spike upwards to trap buyers, will fail. This failure will establish a potential intraday top around 10:45 a.m. From this point, an overwhelmingly powerful negative force is set to take command. This will initiate a decisive, heavy, and grinding set. The market will begin its main assault on the major psychological level of 58,000, which we can call the Jupiter defense line. This brings us to the main event of the day. From 12:15 p.m. to 1:30 p.m. This period is the Jupiter defense and where we expect a potential intraday bottom. As the moon's transit reaches a critical point, it comes under the full protective influence of an exalted Jupiter. This is the preordained time for the smart money and institutional players to make their stand. We're talking about the traders who have sold a massive number of put options at the 58,000 strike. The assault on 58,000 will either stall just above it or briefly break it before being viciously reclaimed. This window is where we expect the intraday low to be formed. A significant high volume and tradable bounce is expected right here. This is the great battle of the day. So, the market bounces. What next? The period from 1:30 p.m. to 2:45 p.m. is all about analyzing that bounce. We call this the secondary trend failed rally. Given the powerful bearish forces at play throughout the day, this Jupiter-led recovery is highly likely to be a failed rally. The bounce will feel heavy and unconvincing. It will struggle to gain altitude and, crucially, it will fail to make a new intraday high. The inability of the bulls to push prices higher after their big defense is the critical setup for the day's final act. The slow, Saturn-like grind downwards is expected to resume. Finally, we enter the closing phase. From 2:45 p.m. to 3:30 p.m. This is the closing volatility and final leg down. This is the breakout moment. But to the downside, the failure of that midday rally will trigger a final wave of selling or capitulation. Traders who held on, hoping the 58,000 level would provide lasting support, will be forced to liquidate their positions. This selling will cascade the market lower into the close. The Ashlesha moon, as they say, gives its final venomous sting. We expect the Bank Nifty to close near the day's lows, fulfilling the dominant bearish bias that was set up from the very beginning. So there you have it, a detailed moment-by-moment script for a highly volatile and fascinating trading day. From the initial anxious coil to the data-driven explosion, the major battle at 58,000, the failed rally, and the final leg down. It's a textbook example of a clash between powerful forces. I hope this deep dive was insightful and educational. Thanks so much for watching. If you found this valuable, please hit that like button, subscribe, and ring the bell so you don't miss our next breakdown. See you in the next video.